All right, thanks for staying with us. The finance and credit system is a key enabler of the other sustainable development goals, particularly in reducing poverty, in giving people dignity. Over the last decade, building inclusive financial systems has become an important objective for policymakers around the world. And this has led to dramatic improvements in financial access globally. Now, currently, access to credit is still a challenge in Nigeria, but the foundation for a sustainable, efficient, and transparent credit system has been laid, and the outcomes, which should not be taken for granted, is beginning to yield fruit in terms of increase in credit, particularly through digital channels. Now, what are your thoughts on the credit culture in Nigeria? Do you think we can improve the culture both as lenders, and as us borrowers, and how do you think we can do that? Now, please let us hear what you have to say. Remember, you can join the conversation, send us an SMS or WhatsApp to 081-803-84663. All right, so borrowing. I know Isi is not a borrowing. She's not a fan of borrowing money.
Aside from the fact that they say he who keeps on borrowing
goes on sorrowing.
According to the Bible, I have had first-hand experience in it. So anything about borrowing money, I try to abstain from it totally. And I've also seen another aspect of us being credit-worthy, Nigeria. And Nigerians actually credit-worthy. When you're talking to Nigerians, they'll say, oh, give me the money. And for you to get your money back, it becomes a tug of war. So that's another thing you should also, look into.
Consider.
So, yes, consider. So Nigerians are not really credit-worthy. And the interest rate at which we're being given the monies, is it friendly?
So that's why I'm looking at it from both.
That's why you would rather stay away from it.
Yeah, that's why I'm actually looking at it from both lenders' perspective. How can they improve on the credit culture? Because if you, for instance, what you've just said about credits, if you look at the interest rates and you say, how can we bring it down so that we have more people borrowing? But Isi, let me ask Norma this question. So if you had 100 million naira and you have a project that you want to embark on and it's going to cost you, let's say maybe 98 million naira, right? Yeah. And you have something else that you need to do to sort out maybe some other things, 5 million naira, maybe for rent and all of that. Wouldn't you rather get someone that would ease off the burden of those other smaller things, so you focus your money on the big investment that would eventually bring more money to be able to pay off that loan? Well, would you not choose that option?
That's a viable option, because I probably have the education to understand how to go about the process of how to go about paying for that loan.
So you have more focus on how you want to pay back.
Yes. Well, for a lot of people, and that's where the problem is. A lot of people are not credit worthy because they firstly do not have an understanding about the credit culture, as in how to be able to go about it and how there are opportunities to be able to pay back for those loans. And the second reason is because the culture here has made it in such a way that people are not accountable. People are not made to be accountable. So somebody tells you, oh, I'm going to borrow money, I'm going to pay it, but they are praying for some miracle to happen so that they can pay back the money.
By the grace of God.
And you're not thinking about the opportunities that are there to be able to. So a lot of people don't have that understanding. It makes the lenders, it's impossible for you to be able to do what you really want to do.
And so that's why the lenders will continue to keep those interest rates at very high rates.
So that they will cover their risks.
And also to attract the right kind of...
No, it's not even that. Even where I'm going is to cover the risk
involved,
factor. Where, so if I borrow Norma, Isi, Uwa, so Uwa default, the money for Norma and Isi will cover for me.
So
that's how it works. But let me ask the experts, not me.
Ope
Adeoye has spent 18 years in the technology and payment system in various capacities, including engineering, leading high-performance product teams, and deal sourcing for M&A activities. Most notable is his work helping to birth the grow Quick Teller and lending services at InterSwitch, Nigeria's largest payment company. He holds an engineering degree from the University of Ilorin and certificates from Lagos Business School and Stanford CPD. Open currently serves, or rather Ope currently serves as a trustee at Open Technology Foundation, helping with advocacy for Open Banking Nigeria initiative. He's also the founder of OnePipe.io, a company building a platform that makes it possible for fintech operators to partner with banks and large corporates. And he's joined us live via Zoom. Hi, Ope. Thank you for joining us. Can you hear me? If you can hear me.
Yes, I can hear you loud.
All right, now I can hear you loud and clear as well. Thank you so much for joining us. So you heard the conversation and the banter about credits. It's quite interesting that everybody, the only reason a lot of Nigerians do not take money is because they are always thinking, how do I pay back? Right? How do I pay back? How do I pay back? But we know that credit is one culture that, if you look at the Western world, is what they live by, they stand by, and that's how come they're able to reduce some kinds of burdens from their citizens, rather, right? Unlike Nigeria, where everything is cash driven, right? You want to buy a car, you're thinking of getting the complete money, so you buy the car. You want to buy a house, you're thinking of getting the complete money. You want to do anything, you're thinking of getting the complete money. So I was just wondering, you know, how do we even start to build credit systems, right? How do we build the culture of credits in Nigeria? What do you think the biggest challenge would be, you know, in building that credit culture in Nigeria?
I mean, if you don't mind, I'll take it back just a little bit.
Okay.
At the core of credit is that if you take Ope, for instance, Ope's salary is 100 naira. Ope is likely to remain paid employment for the next 30 years. Extrapolate for how much Ope will make in income over the next 30 years. You can do that. Once you have that figure, you can take that figure and say this is Ope's assumed credit worthiness over the next 30 years. Then there's something you can do. You can advance in that money to do projects that can help him make even more money as he continues his 30-year journey. So in practical terms, 100 naira times 12 months times 30 years, I can take that money, I can start some other business or some project now that takes my income up from 100 naira to 120 effectively. Now from that 120, I can start to pay back my the same loan I took. After some time, I can probably refinance that loan and pay it more. So at a high level, creditworthiness or building a credit culture starts from being able to have predictable income, no matter how you slice and dice it. So if I'm a guy that runs a shop at the corner of my street, I need to demonstrate to a large degree that I always move volumes up to X amount every week consistently, and then someone can calculate what they think my income will be over X period of time. So to build a credit culture, the very first step to me sounds like we need to get people into predictable income to a large degree. And one of the things that make it difficult to have predictable income, or at least have visible, predictable income, is when we always operate with cash. So for example, back to that guy that has a shop on the streets, he takes his income in cash from people that come to buy from him. When the supplier comes to drop supplies, he also pays cash. Now, if somebody wants to advance in credit, how does that person know that their side has a shop? Yeah, that their side has a shop, your income is always 100 naira. You don't know, nobody knows. The only person that usually knows in that case is that supplier that comes to supply goods. Just because at least the supplier knows how much I bring for you, how much you order regularly from me. Now, if I take supplies from, say, 5 different distributors, it becomes even more difficult because only one person will know what you buy from. So, to build a credit culture that can help us, I think the very first step will be get more people into repeatable income, then get some of that income to be visible to lenders and people that want to advance you credit to do even more productive. That's how I say.
Okay, so I want to just quickly you know, take a follow-up question on this predictable income. Because the economy, the Nigerian economy is very volatile.
Exactly.
Right? So how is that impacting? Because you see the predictability right now, it's not anywhere. There's so much uncertainty in people's income, right? So if we say that the first thing is to be able to predict, to say, okay, this is it. I get that part of, you know, like for instance, the underbanked. I know that a lot of people started going into the culture of banking their daily sales, especially business owners, because they now realized that at some point the commercial banks were really focused on growing SMEs. So they were making sure that they were, what's it called, putting in their daily income so they could track and trace and say, okay, you know what, I think this person, based on your sales, your revenue and everything, I can give you 5 million naira to increase your turnover and all of that. So that was possible. But the predictability now is where I have a problem with. You know, how can this work? Because the economy is actually quite volatile.
Yeah, so predictability is a function of time, nothing else. If I made $1 million last month and made 900K the previous month and made 1.2 million the other month, there's a sequence or duration of time we can go through to which we can come to a conclusion that this person's income is 850K, believable to an extent. So it's always a function of time. How far back are you willing to go? Then the fluctuation you can't really explain, or the shock that you think will come to this individual or company or SME, is what you then price as risk. So I look back at the shock for 3 years. And consistently, this shop has been turning over between 100 naira and 1K. Maybe it's always going between 100 naira, but it's 100 naira to 1 at the end of it. I can safely say, I think this guy will make 120 naira every month for the next 5 years. But I don't trust that he will not have a shock event. All right, so I will discount that by 2 years, for example, so I can predict this for 3 years. Then there's still a risk, and I price that risk at a particular percentage. So predictability is really just a function of time. How far back are you able to go? Then the shock effect that you don't really understand or can't account for is what you price into this.
Okay. So you've talked about predictability, and we all understand that Nigeria has a very volatile environment. And we know currently that the interest rate in Nigeria also plays a huge role in this, because it's about, according to the inflation. If the interest is high, the inflation is high, of course the interest rate will go higher. If I do stand corrected if I'm not correct. So in this context, we also have the ICA, which is the Institute of Credit Administration. Do they have a role to play in, you know, maintaining a balance between the pricing of the interest rates in Nigeria currently? What's the role in this?
Ope just told you now that the guy factors in the risk factor, and I think those are part of what increases that rate. Problem.
Exactly. And to take you back, I think ideally you would divide credit into 2 types: formal credit and informal credit. Many of all the regulations and rules and guidance and bodies that you can speak to are mostly around formal credit. There's really so much more going on in informal credit than formal credit. And because it's informal, almost just like that cash that you can't track, there's only so much regulation you can have. You cannot regulate a guy who says, I'm going to supply bread to your shop, I'll come and collect my money a week from now. But you see that bread that I gave to you at 100 naira, because I'm not collecting my money now, I'll give it to you at 110 naira. Where's between that? What will you do about it? And if that guy takes that bread at 110, then he will sell it at 120. How does he make money? Hence again, they are driving up inflation, etc., etc. So I think in my view, there's a direct correlation between the pricing of credits at the lowest ends and inflation as relates to our staples and regular items that we all live on. That's my view. And I think the more we can get people into formal credit that is regulated, that potentially has more liquidity anyway, then we can drive down inflation, at least over the mid to long term.
Do you have any, would you have any kind of suggestion to how the government or Nigerians can, what are the tools that they can use to drive this concept which you've just given to us, based on the fact that we need to sensitize the individuals or Nigerians on how well they should
focus on
structured
credit loans.
No, what's the word?
Informal loans.
Informal loans. Informal credit, yes, please.
As a very first step, it will be things like the government's cashless policy driven by the city. For example, if the cashless policy requires you to bank your money, which is effectively what it is, bank your money or you get penalized, then banking your money creates visibility for your business. That visibility for the business then allows formal lenders to approach you with propositions that are useful for you, right? So I think as a very first step, government can have policies that encourages more digitization in different sectors. The cashless policy is one, although I doubt how far into the bottom of the pyramid such a policy can have an effect. So the policy that says you cannot deposit more than 500 per day, for example. How many people really make 500? So that's an example. So maybe such policies can be allowed to get even more to the retail levels.
At the grassroots.
That potentially, to the grassroots, that potentially can then have a domino effect to other things. Right? So maybe that's one. This example again, this cashless policy is driven by a more longer term plan that the CBN usually has. FSS 2020, they come up with FSS 2030 now. So you take a long-term outlook on the market, you create short-term policies that are in line with that long-term outlook, and this is one of them. Another one is things like, although I'm not totally a fan of that, another one is things like trying to regulate the informal lenders, put some pressure around what pricing could look like, etc. I think in the spirit of free market and free economy, that probably doesn't work. But so I think maybe that's another area that could be looked at. Some way to allow lenders to have some kind of oversight to an extent without totally constraining their economic constraints.
So
I wanted to say, when you said informal lenders, I have a lot of loan sharks, but it still seems like a lot of people actually focus more on going back to those loan sharks than going to the official, the formal sector. So, what narrative are they selling to them that makes them feel the need, to go to the loan sharks as opposed going to the structured, formal lenders, right? The structured and the more competent, if you might say.
They don't ask them for their blood money.
But he said, check it now. So I want to take a loan from a formal organization. They're going to give a long form that's like 5 pages. I will not fill that form. Then I get my brother who understands the form. What are they saying inside this form? I take it back. And I wait for 3 days for someone to tell me, you don't really qualify, etc. That's just a loan. I just want to go to my hotel and buy a basket or something to say. I will just left and find someone to give me that.
Exactly.
Yeah. So I was going to add, because it was that was where I was going, because I'm thinking about the everyday person who does not understand all of that. It still comes back to education. So how are the everyday people going to be encouraged to actually follow these formal setups for credit? What differently can be done to educate the everyday person about the importance of credit culture, being credit worthy, being able to organize your system in such a way that you can have predictable income and qualify? What are simpler methods that can be used so that more and more everyday people can be encouraged into the credit culture?
At the end of the day, examples work. You look less, you see your neighbor who said, I took a loan of 200,000 naira from XYZ. I started business X. Look at me 3 years afterwards. I'm looking. Those examples work. It's the same example that people like betting companies use. Because you know somebody that's won, you think it's said to win, so you ban. This principle can be applied to credit. I'll use a case that I found very interesting. Some lady that had a beer parlor took her very first loan from one of the common loan companies and handled it very well. 2 years later, they went back to visit that woman. She had become a distributor for alcohol. The end. She has gone away from beer parlors. I'm a distributor now. Look at my warehouse. From the very first loan. So one of the things to do is have examples around of people who have succeeded by judiciously using the loans that they got. Promote those examples amongst their neighbors and friends that they can see, and you will see the effect afterwards. You will see. And then for the individual, for the SME, take your first loan and do well at it. Just take your first loan. That's the way I always see it. Take the very first one and do your absolute best to be proper with that loan that you got. Because for most lenders, whether formal, informal, loan shark, bank, neighborhood cooperative, whatever, the performance, your credit performance is much more even important than your both predictable income. Like you took a loan last year, you paid back consistent. Okay, you took another one this year, you paid back consistent. Someone like me, I went through university on cooperative loans. The end. My mom used to always joke about it. Your school fees is almost time. Then the cooperative. That's it. And every year she took that loan, paid all our school fees, and then didn't have much of a salary again because she was paying for cooperative. She finishes paying that one, the next one is coming again. So that's sort of how you do it. Great examples around. Let consumers take their very first loan and treat it well. Then things will go on.
Okay, so let's take a break. Let's take a break. When we come back from the break, we'll continue the conversation. Stay with us. We'll be right back. All right, thanks for staying with us. Now, if you just tuned in, we're having an amazing chat with Ope Adeoye on improving credit culture in Nigeria. Now, please let us share what you have to say. Remember, you can join the conversation. Send us an SMS or WhatsApp to 081-803-84663. You can tweet at us at WadeShowAfrica1 with the hashtag WadeShow. Ope, you're making me feel like I also have to go and borrow money now. It's like...
Borrow money.
Why will you not say that? Is it not your work that you're doing? but I was going to say that what's the biggest, because I know Isi had a question, but I wanted to just quickly tie into what you were talking about. I mean, when I hear you talk about your mom and how she would pay back the cooperatives and all of that, you know, I've heard that a lot of people that pay back their loans are actually the people, you know, when it comes to, it's all this AMCON stealing. Those are not the people who should be loaning money to, because all these people that are stealing, AMCON is stealing this, is stealing that. When you give loans to those kind of people, they actually have a very bad loan culture. But when you give loans to the market woman on that she knows she needs to pay school fees and all of that, she pays back with so much diligence. They do not skip on the timing and all of that. But I wanted to say, what is the biggest challenge that lenders face? Is it a what's it called, an identity problem that the lenders face? Or just, okay, plain default, people are not ready to pay? Because a lot of times, we've always tied credit problems or, to the fact that they are not able to identify the customers, proper details. So the way you have KYC, your social security numbers when you're abroad and all that, we don't have all of those here. Yeah. Is that still a big challenge when it comes to credits in Nigeria?
I think... Yes. I think when it comes to credits, the problems are many. The problems are many. Identity is one. Everybody will tell you that in the business of credit, there are two ways you assess a possible loan: willingness to pay and ability to pay. So in your example of the AMCON people that get sued, they have the ability to pay. They just don't have the willingness to pay. Because typically, there are no consequences per se. You default on your bank loan, keep speaking English here on the air, someday AMCON will come and save the bank, write off your loan, move on to the next bank and start your next vision. Right? So it's always willingness to pay and ability to pay. What you find is that at the lower pyramids of the economy, because willingness to pay could be high at times, mainly because this person is aspirational. I took a 100K loan and I had a child. Now I have 2 children and I need support for those 2 children. Whether I pay off that 100K loan so that I can now borrow 120K to help my 2 children, something like that. So you may find out that in many cases, at the lower ends of the pyramid, the willingness to pay might be higher. Now, when it comes to ability to pay, that's where the problem starts to come. Inconsistent income, village people will do you bad, events will occur that make it difficult for you to pay. Now, as long as concepts like consequences can be introduced, which is some of the things that you see many of those sharks do, consequences that tell you that I know you have a problem. I know if somebody in your village does die, but you owe me 20,000. Pay me my 20,000 naira than supporting the person that just died. If there are no consequences to not paying that 20,000, I would rather support my village person. Let alone shall go and deal with his own problems. But if there are consequences, I will find some way to meander around that my village person problem, pay off my loan. When I do pay off my loan, I'll get 25K next, right? From that 25K, I will decide to then go take the village person or not. So as long as we can create mechanisms around consequences that are acceptable, right, you may find better performance credit portfolios overall. Now, this also leads many lenders to do extreme things. Texting your contacts.
I've been getting all those texts lately.
Yes.
I don't know that.
They've been threatening people as well, telling them or putting obituaries, something like that.
So these are just crude ways of trying to create consequences. In more developed economies, you have like a central credit score that you default on any credit anywhere. Your credit score is taking the lead. That makes it difficult for you to rent a house. You can't buy a car. You can't move to a new neighborhood. A school will not accept you. etc. So they created a central system of consequences that sort of forces you to be true to the obligations that you have. So if we can find some way in Nigeria, for example, to create some central consequence management thing that is humane, people will try. They will try a little harder. But of course, there are also other issues like identity, low income levels. etc. Those ones they are here with us.
So with what you're saying now, where does government play a role? You know, because to create a central system, it will require government to be involved. You know, having a national sort of system that enables people to be identified, whether they are creditworthy or not. So is it the responsibility of the credit facilities, or is it government, or is it a collaboration? What exactly is it?
When it comes to what can government do, I think you are speaking to the wrong guy.
Oh, right.
because my view is always there's always an economic construct that can work faster than waiting for government. So, imagine if by some stroke of money, all lenders, formal, informal, cooperative, credit union, whatever, all lenders just agree to share information about their buyer.
Okay.
There you go, that's it. Now, imagine that all these lenders today that have NPLs that are over between 5% and 50%, which is terrible. Imagine all of them just agree that we'll just pay a small portion from our interests to know what is inside this central registry of sorts, and we just agree to cooperate. It is so much more powerful. It has economic impact than waiting for someone in Abuja to help us construct something. So when it comes to what can government do, I think you're asking the wrong guy.
All right.
Just, I have this bias for why can't people just organize it?
Makes sense.
Makes a whole lot of sense.
That's so interesting, because you just imagine I blacklist. Maybe Unoma is a blender. I just
not me. Disclaimer.
I'm going to put you in the central system and say, never you loan this money. But I think I like that idea of,
it makes total
it's
sense.
called like collaborating or synergy, you call it whatever you want to call it. But that would definitely, work when it comes to this thing. So but what I wanted you to just put it, because for people that are watching and they're wondering, why do I need to take a loan? Right? I want you to paint a scenario of what truly, taking some of these credits, building a good credit culture, and taking some of these credits and easing off some of this burden. What does it truly mean for the economy? What does it mean for you as a citizen, your livelihood as a person? What does that mean for you?
I will use a very simple example. A woman that has a small pepper store in the market close to me here. And she just sells pepper and tomato. Then she notices that people always buy her pepper and tomato and go to the next store to grind it. And she's like, on this my pepper and tomato, I'm making 1K per day. But they say if I have grinding machine, that's the pepper I just sold. I will charge the same guy to
make more.
But this grinding machine happens to cost 60K. But I'm making 1K every day. How long will I add up this one?
To be able to buy it.
To buy this grinding machine. Now imagine that someone says, but madam, you have been selling this pepper and tomato for how many years in this market? 60K, you make it in like 2 years. No problem. But I take my 60K and buy the grinding machine. This woman's income just went from 1K per day to maybe like 2K. She has moved up in life. Multiply that by say 40 million SMEs. Raise the bar on what economic well-being for the average citizen or the country as a whole looks like by just having liquidity. Now let me blow your mind with it. No money, no money, no money. There's capital in the Western world, for example, that is idle, that is wondering why the return on that capital is between 3 to 4%. Meanwhile, here's a woman in Lagos that could double her income by just offering her 60K, and there's 40 million on her. If you could get that capital to travel from the US or Europe to come set these people, the returns are way more than 3% that you're getting in the economy.
Right.
I've lifted more people out of poverty. That's some of what drives people that are in this business.
No, but Ope, you see, so when those kinds of capital come into our country, because I know people that have access to those kinds of loans at 4%, 3%, the percentage still goes high. So back to Izzy's question on, the interest still goes higher than that. So it's not maintaining. So what's that factor that makes it go higher?
Risk.
Yes. So it's the risk factor, just the risk factor.
Risk then needs to be priced. Yeah. Risk then needs to be.
And it is now priced that high.
It's priced like that. So I heard the example. 3 of us pay loan, 100K, 100K, 100K. And person will not pay back. My price is 33%. That's it.
So they will help me pay. For my default, they will pay for my default. So they should. I think us that were borrowing money, we should go and be looking for fellow borrowers and just be flogging them. We just because if we hold ourselves accountable, the interest rate will drop. It's simple.
Well, but a lot of education comes into it because a lot of people don't know. I mean, the way you're breaking it down now, you can only imagine.
I want to go and borrow money this night.
The number of Nigerians who have no idea what the benefits are and how it can help them out of seeming financial crisis from day to day, right? So what can we do really to continue to educate people?
Reorient the mind
and reorient people about credit culture.
Examples. Promote those examples. Let them be seen.
You must share the stories.
And know that share the stories. Exactly. People will then know that these things are for.
Hey, Oluwa.
Take a loan today.
We're considering.
So now that you're talking, let me tell you why a lot of people are afraid to take loans. They are afraid because they do not know whether they'll be able to get that. I mean, the predictability of their income. Something can go wrong and they might not be able to pay back. So what then happens to you as a borrower if you loan money and you realize that, oh my God, I loaned 500,000 naira, and now I was able to pay back 300,000 until I lost my job. So what should I do to go back to my lenders, and how do I go about that? How do I navigate that? So it's not looking like I want to deliberately default. There is a problem. So how do I go about it? And you as a lender, so how would you make it easy for me? You know, to be able to say, okay, you know what, I will pay you back, but this is how we have to restructure it.
So our lending market is not that mature yet for things like refinancing and things like that, but they do exist. Now, common sense tells this lender, whoever the loan officer is, that I can either just walk away and not pay you the end. Or I brought my 2 legs to your shop, my slippers, and I explained to you my problem, and I said, let's restructure my loan. He pays them to restructure it than to have you walk away. That's it. So I don't think there's any lender, be it structured or structured, bank, MLB, whoever, that you walk into and say, sorry, I couldn't meet my obligation, that wouldn't figure out some way to internally refinance somehow. Because the alternative for them, they are going to just walk away and say, sorry, that's what it is. So, in my view, I don't think that's much of a problem. I think it's just that most people, once you find out that you cannot handle it, they just walk away.
I don't know if you've convinced ECO, because EC is against lending. And you know some churches.
I was actually going to ask him if you were going to convince someone who wasn't interested in taking a loan before.
Like you, don't say somebody. You.
For me, I am still a diehard. I will not. I'm still a doubting Thomas.
He's asking for a friend.
No, I'm asking for myself. I debunk that. So I would say this: if you have to, after all this grammar you've given to us on how to, go about, improving or enhancing the loan culture. If you want to, actually tell someone who is not really interested in everything, give me 2-3 benefits of taking this loans.
You're on the hot seat.
You can grow your hustle. It's blood. If somebody's money can save you, that's better. Also, from selling pepper and tomato and add a grinding machine to it. My cash will help me do that. Just pay.
Okay. Absolutely. You cannot. Can I also help you, Ope? You can also, from the grinding machine, you can also upgrade to either, packaged, ready stew, ready to stew, based on equipment. Because if you buy machines, you can decide to say, you know what? Instead of just selling tomato and pepper, when you come, madam, I have the mild pepper, medium pepper, high pepper, blend, ready to just straight to cook your stew. I'm sure they will be willing to buy. But I think we've had a fantastic conversation. We're hoping you come back again. Thank you so much. Yes, I will take a loan. But you have a lot of people to contend with. All these church people that will tell you that I've never taken a loan. There's a culture, there's a religious angle to that.
Goes on borrowing. It's as simple as that. You won't be able to sleep well at night.
So you haven't convinced Issy.
Don't worry. Issy has not understood it yet.
When Issy sees me, I have. Okay. What you need to do is don't borrow to acquire liability.
Oh, definitely.
Borrow to acquire an asset. It's as simple as that.
And make more money.
It's as simple as that.
But we've done a better job than me.
Thank you so much, Ope. We had so much fun doing this. We didn't even take message. We apologize on behalf of ourselves. But thank you, Ope. We've had a fantastic conversation. Thank you, ladies. Thank you, Issy. Thank you, Nama. I want to go and borrow money now. Alright, so before we go, do ensure you follow us on Instagram. It's at PlusTvAfrica. You can interact with us further, drop a comment, or more importantly, follow all the conversations on social media. Remember to like, share, and invite your families and friends to watch and follow the conversation as well. Don't be stingy with this information. You need to tell families and friends to watch so you can learn something every single weekday, Monday through Friday. Alright, if you missed today's quote, here it is again. When you pay cash for everything, your credit score becomes irrelevant. So try to build your credit score, so you can make more, you can actually upgrade your life, right? Yeah. Building more things and expanding whatever hustle it is that you're hustling. All right, see you guys live at 8 p.m. tomorrow as we bring you another great conversation. Enjoy.